In today's video, we're going to talk about why Bitcoin ETFs will be a game changer in the crypto market and why you should consider investing in them at the moment. I also place in the description below a link below of a training I believe is the best crypto trading out there. But before we start, don't forget to subscribe and press the bell icon to be notified for future videos. The U.S. Securities and Exchange Commission recently approved futures-based exchange-traded funds based on Bitcoin. This will be a game changer and will enable regular investors to get invested in the crypto market. For cryptocurrency enthusiasts and investors looking to capitalize on the growing popularity of exchange-traded funds, ETFs, the possibility of an ETF that tracks Bitcoin is the best opportunity for this type of connection. However, there have been growing pains and problems in trying to launch the first Bitcoin ETFs. The reason is that Bitcoin, the largest cryptocurrency in the world by market capitalization, remains largely unregulated. Additionally, the Securities and Exchange Commission (SEC) is hesitant to allow an ETF focused on the new and largely untested cryptocurrency market to make its way to the public. So how does a Bitcoin ETF work? Before we look at the potential benefits and risks of a Bitcoin ETF, let's back up a step and go over what a Bitcoin ETF is and how it works. An ETF is an investment vehicle that tracks the performance of a particular asset or group of assets. ETFs allow investors to diversify their investments without actually owning the assets themselves. For individuals looking to focus only on gains and losses, ETFs provide a simpler alternative to buying and selling individual assets, and because many traditional ETFs target larger baskets of names with something in common, a focus on sustainability, for instance, or stocks representing the video game industry and related businesses, they allow investors to easily diversify their holdings. A Bitcoin ETF is one that mimics the price of the most popular digital currency in the world. This allows investors to buy into the ETF without going through the complicated process of trading Bitcoin itself. Moreover, because holders of the ETF won't be directly invested in Bitcoin itself, they will not have to worry about the complex storage and security procedures required of cryptocurrency investors. Why not just invest in Bitcoin? If a Bitcoin ETF merely mirrors the price of the cryptocurrency itself, why bother with the middleman? Why not just invest in Bitcoin directly? There are several reasons for this. First, as indicated above, investors don't have to bother with the security procedures associated with holding Bitcoin and other cryptocurrencies. Further, there's no need to deal with cryptocurrency exchanges in the process. Investors can just buy and sell the ETF through traditional exchanges and markets. There's another crucial benefit to focusing on a Bitcoin ETF rather than on Bitcoin itself. Because the ETF is an investment vehicle, investors would be able to short sell shares of the ETF if they believe the price of Bitcoin will go down in the future. This is not something that can be done in the traditional cryptocurrency market. You can short sell Bitcoin ETF shares if you believe the price of the underlying asset will go down, an advantage you won't find by investing in Bitcoin itself. Perhaps most importantly, though, ETFs are much better understood across the investment world than cryptocurrencies. Even as digital coins and tokens become increasingly popular, an investor looking to get involved in the digital currency could focus on trading a vehicle they already understand instead of having to learn the ins and outs of something seemingly complicated. On October 19, 2021, trading began on the ProShares Bitcoin Strategy ETF, making it the very first Bitcoin-related ETF. The fund, which trades under the ticker BITO, will track Bitcoin BTC USD prices through future contracts traded at the Chicago Mercantile Exchange (CME), while the fund still provides access to the growing asset class and allows investors to short sell BTC. ProShares ETF is different from some of the proposed Bitcoin ETFs mentioned above because the fund will not be directly tied to the spot price, instead tracks the future price of Bitcoin. This means that the returns from funds like BITO based on Bitcoin future contracts can be much different from Bitcoin's spot price, a situation in which longer-dated future contracts have higher prices as compared to short-term contracts, known as contango, could lead to losses for funds that track the prices of volatile assets like Bitcoin. In conclusion, although hopeful crypto enthusiasts see the ProShares Bitcoin Strategy ETF as a step in the right direction, many investors and fund managers are eager for the SEC to approve a Bitcoin ETF that is directly tied to the currency. Ultimately, a source at the SEC explained, U.S. residents are sending money to all sorts of exotic locations to invest in unregulated cryptocurrency instruments with absolutely zero recourse for losing every cent they've put at risk. Regulation will begin to solve those issues and keep client assets onshore. You will find in the description below the link of what I believe is the best crypto trading training out there. Give us a thumbs up and show your support in the comment section below. See you in the next video. Until then, keep smiling. Please subscribe to my channel if you have not done it yet, and don't forget to click the notification button. I hope you guys learned and enjoyed this video. Thank you, and have a great day.